thinking about helping someone buy their first home, maybe your child, a sibling, or even a close friend, or maybe you're on the buying side and someone is stepping up to give you a financial gift to make homeownership possible. Either way, gifts can be a powerful tool to help with down payment, closing costs, or reserves. But here's the catch. Each loan program, Fannie Mae, Freddie Mac, FHA, VA, and USDA, has different rules about who can give a gift, how it must be documented, and what it can be used for. So today I'm walking you through the exact differences, clearing up the confusion, and helping you understand how to use gifts the right way for each loan program. Let's get into it. First, let's define what we mean by a gift. So a gift is money given to a borrower without the expectation of repayment. It can help cover your down payment, it can pay for closing costs, sometimes it can even help meet reserve requirements. But, and it's a big but, every loan program has some specific rules about who can gift, how the gift is documented, and what the gift can be used for. And messing this up can delay or even derail your closing. Let's start by who is allowed to give a gift under each loan type. So for Fannie Mae, it's relatives, so parents, children, siblings, domestic partners, relatives of a domestic partner, godparents, fiance, former relatives. For Freddie Mac, it's relatives, domestic partners, unrelated individuals with family-like ties, fiance, or unrelated individuals only for wedding or graduation gifts. For FHA, it's relatives, domestic partners, close friends, employers or labor unions, government or charitable organizations offering homebuyer programs. For VA, it's anyone who's not affiliated with an interested party, meaning not the builder, seller, real estate agent, or developer, but everyone else is allowed. For USDA, same as VA. Gifts must come from someone without an interest in the property transaction. So you notice the pattern? Most programs prefer gifts from people with a real personal relationship to the buyer. Next, let's talk about the type of properties where gifts are allowed. So for Fannie Mae, primary residences, so 1 to 4 units, second homes, but it's not allowed for investment properties. For Freddie Mac, it's exactly the same as Fannie Mae, primary residences and second homes only. For FHA, primary residences only or 1 to 4 unit properties are eligible. VA, primary residences only. USDA, primary residences only. So pro tip, if you're planning on buying a rental property or an investment home, gifts usually are not allowed for those. Here's where it gets a little tricky. The minimum borrower contribution rules. So for Fannie Mae, if your loan to value is over 80%, no personal contribution is required for a 1 unit property. 5% of personal funds are needed for a 2 to 4 unit home or second homes. If your LTV is 80% or lower, no personal funds are required for any property type. Freddie Mac, same idea, but a little bit more flexible. So no personal contribution is needed for either a 1 unit or 2 to 4 unit home. 5% of personal funds are only needed for second homes when the LTV is over 80%. For FHA, no personal contribution is required at all. Gifts can cover everything, including 100% of the down payment, closing costs, and even reserves if AUS approves. AUS stands for Automated Underwriting Service. For VA, there's no minimum borrower contribution whatsoever. Gifts can cover closing costs and down payments. For USDA, it's same as VA, no minimum borrower contribution. Translation, FHA, VA, and USDA are much more flexible when it comes to gifts covering everything. Okay, now let's talk about what the gift money can actually be applied to. Fannie Mae and Freddie Mac. So gifts can cover closing costs and down payment, but not reserves unless special conditions are met. For FHA, gifts can cover closing costs, down payment, and reserves if the automated underwriting system or AUS approves. For VA and USDA, gifts can cover closing costs and down payment. So the important tip here is even when gifts are allowed, they must be properly documented with the gift letter, and in many cases, you must show a paper trail from the donor's bank to your bank. Here's a really cool tip specifically for Fannie Mae. If you receive a gift from a relative, a domestic partner who's lived with you for the past 12 months, or a fiance, then that gift can actually count as your own funds towards the minimum borrower contribution. And that's a big win, especially if you're buying a 2 to 4 unit property or a second home where a personal contribution would normally be required. But remember, both you and the donor must intend to occupy the home as your primary residence. Regardless of the loan type, every gift must be properly documented with a gift letter. This letter should include the donor's full name, address, and relationship to the borrower, the exact dollar amount of the gift, a clear statement that no repayment is expected, the donor's signature and date, and the borrower's signature and date. And some lenders may also ask for a copy of the donor's bank statement showing available funds, proof that the funds were transferred to the borrower, like a deposit slip or a wire confirmation. So missing documentation is one of the biggest reasons loans get delayed, so make sure your gift letter is complete. Here are a few common mistakes to avoid when using a gift for a home purchase. Using gift funds from an ineligible donor like the seller or real estate agent, failing to properly document the gift transfer, trying to cover up a loan as a gift. Lenders will catch it, and it is a problem. Exceeding seller concession limits when combining gifts with other credits, forgetting that the rules can vary depending on whether you're using FHA, VA, USDA, Fannie Mae, or Freddie Mac. Always be upfront with your lender about gift money. Early communication can save you a ton of stress later. Understanding the gift rules isn't just a technical detail. It can literally be the difference between closing on time or losing your dream home. So proper gifts can make homeownership possible when you might not have enough saved. They can reduce your loan amount, your monthly payment, and your financial stress, and they can help you compete in today's real estate market where cash to close matters more than ever. If you're thinking about using a gift for your home purchase or helping someone else with a gift, here's what to do next. Confirm you're an eligible donor based on your loan type. Prepare your gift letter early in the process. Gather any additional documents that your lender will need, and communicate clearly with your real estate agent and lender about the source of your down payment. And if you're not sure how your specific loan program handles gifts, don't guess, just ask. Still have questions about gifts of equity, or how to help someone buy their home? I'd love to be of service. Contact me today to set up a call where I can walk you through all the rules, answer your specific questions, and make sure your transaction goes smoothly from start to finish. And if you found this breakdown helpful, make sure to subscribe for more mortgage tips, home buying strategies, and expert insights. Click the link below, book a time, and let's make sure your gift, or the one you're receiving, is the key to successful homeownership.